It was a great week for the portfolio. Today, we're going to discuss my dividends, my margin status, fund performance, and we'll do a check-in on MSTY. How has it been performing since I purchased it a little over 2 months ago? I'm on the hunt for an infinite stream of dividend income, and it begins with my plan to turn $1,000 of Robinhood's money into $1,000 of my money. Let's recap my plan to turn Robinhood's money into mine. And remember, none of this is financial advice. You need to do your own research for your investments. The plan begins with Robinhood Gold. I pay $50 a year to be a Gold member, mainly for the perk of a 3% IRA match. One of the other perks is an interest-free $1,000 margin loan, and this is critical to turning their money into my money for free. First, I picked a foundation fund, which was PAAA, and I put a little over $2,000 of my money into this fund. It acts as the anchor of my portfolio. PAAA is a very stable fund, and so it smooths out the volatility of the high-yield ETFs that I'm using to generate income. I used the $1,000 of interest-free margin loan from Robinhood Gold to purchase $250 each of MSTY, SNOY, KOI, and NIVI. These are all high-yield ETFs that generate a lot of weekly or monthly income. I take half of the dividends I receive from each of those and reinvest them back into the funds. I take the other half and invest it into my forever fund, which I chose as MSTY. It's a NAV stable ETF that I hope to be able to hold on to for years or even decades. Once I build up my MSTY position to $1,000, I'll stop investing dividends into it and start using those dividends to pay down the margin loan, sell off the 4 high-yield ETFs, and close out the loan with me still having $1,000 in MSTY, free and clear. One of the keys to this strategy is the margin minimum of $2,000. If I go below that number, I'm subject to a margin call, and I've run into that problem already. I miscalculated how Robinhood determines the margin total, and that was almost a big mistake. I've learned from that, and if you're interested in how that works in more detail, check out my videos on margin jail. Now that we've got the basics behind us, let's turn to dividends. This week, I received weekly dividends from NIVI and KOI. The NIVI dividend at 44 cents was a slight improvement from last week. I've been concerned about this fund a little bit. As you can see, starting on September 3rd, every dividend has gone down a little bit, and we finally broke the trend on September 30th. The KOI dividend has continued its really volatile behavior, going from 59 cents per share last week all the way up to almost $1.34 per share this week, which is incredible. That's the highest dividend I've received so far. In fact, if we look at all of KOI's distributions, this last week's was the highest ever, $1.34. A few of these others are also over $1, but they're not quite that high. And this really gives a good visual representation of how up and down KOI's dividends are. They average out still pretty high, but I wish it was a little more consistent. To further illustrate this, here's a graph showing KOI's distributions compared to NIVI's. The line for NIVI's distributions is a lot flatter, meaning that the distribution amount is more consistent week to week. MSTY and SNOY pay out their dividends every 4 weeks, and I received both within the last week. MSTY paid me on September 26, $1.01 per share. That's the lowest amount ever for a distribution. I think they're trying really hard to keep it over $1, but that's just a hunch. We'll get into more MSTY later in the episode. SNOY paid me 43.5 cents per share, but I haven't had an opportunity to reinvest it yet. That's only a $6.95 distribution for the 4 weeks. And like MSTY, this is the lowest yield that SNOY has produced in a month. Its distributions, like KOI, are pretty erratic, where you see highs over $1.50 and now lows under 50 cents per share. Hopefully, SNOY's next distribution will rocket back up to over $1 a share like it did last time. We'll have to wait and see. Finally, I also received my PAAA dividend, 22 cents per share for a total of $9.54. This is a little better than you would get in a high-yield savings account, and PAAA is doing a great job of holding steady, serving as the foundation or anchor of my portfolio. I'll be reinvesting the SNOY and PAAA dividends next week. SNOY's dividends are divided up like the other ETFs, half to MSII and half back into SNOY, whereas PAAA gets all of its dividends reinvested back into PAAA. My portfolio equity is up to about $2,160, which is almost a 3.5% increase from last week. As you can see, I have $6.95 in buying power, and that's just dividends that I haven't had a chance to reinvest yet. My margin status improved dramatically. My buffer is over 7%, which I believe is the highest that it's ever been. So I've moved from high risk to low risk. MSTY was the only one of my 4 high yield ETFs in the red this week, and it was only down about 1%. NIVI had a pretty good week, up about 1.75%. Last week was really bad for MSTY, and this week saw a great improvement, up over 7%. But the star of the week was KOI, up 19%. That's a welcome increase as KOI tries to claw its way back to July values. So the portfolio overall in total return is down about 4%, which is so much better than last week. KOI went from being down over 30% to being down a little less than 16%. If we could get a couple more weeks like this, I'd be in really great shape. Now, let's turn our attention to MSTY and do a checkup and see how things are going. Just to set the stage, I initially bought into MSTY on July 23rd at over $21 per share, and the price has slid since then, currently trading at about $14.71 per share. So is this just a MSTY problem, or is it a strategy problem with MSTR? First, I want to circle back to dividends. I had mentioned that earlier, and that the most recent dividend was the lowest that MSTY has ever paid out. Here's a graph of those dividends. Lots of ups and downs, but we've been on a decline for a couple of months. In fact, for most of 2025. Let's set the stage for comparison with some of MSTY's competition. Let's head over to Yieldmax.com. This is a website created by Amy from the YouTube channel Bad Financial Decisions. We can go down and filter to only funds based on MSTR, like MSTY. Since the default investment amount is $100, we can look at the annual payout box for each of these funds and get an approximation of the yearly yield. We have MS2 at about 22%, MST at about 76.5%, MTYY at almost 99%, MSTW at about 66%. I'm not counting winter in this comparison because it has a very different strategy. Here's MSTY at 85% and IMST at 102%. MTYY from Granite Shares is one of their brand new Yield Boost ETFs. It's so new that as of the time of this recording, it's only paid out one time. So I'm not going to use it in these comparisons because there's simply just not enough information. I headed over to seekingalpha.com and put all the funds I wanted to compare into a chart to make it a little easier to take a look. The first chart here is dividend amount, so we're just looking at dividend consistency. We've talked about MSTY already. It started off bouncing up and down and has entered a gradual decline. MS2 has been pretty static. MST also a flat line, meaning they're paying out a consistent distribution. MSTW has bounced around a little bit, but nothing huge. IMST started off with an incredibly high dividend and dropped down considerably, is recovered a bit, and has maybe flattened off some. Turning to price return, I added MSTR, which is what all of these ETFs are based on, to the chart so that we can see how they're doing in comparison with MSTR. This is a percentage of price return so we can compare them all evenly. And already at first glance, I can see a pretty big gap between the return of MSTR and all of the others. However, many of these are newer funds, so let's get a closer look. If we change to the 6-month chart, we still see MSTR on top. MSTR has a return of over 24%, while all of the others are negative. IMST is minus 24%. MSTW is down almost 32%. MST down almost 53%. MS2 down almost 19%. And MSTY down about 26%. Let's change it to the date that I purchased my original shares. This changes the picture a bit. MSTR is down about 15%. Most of the rest are down over twice that. IMST down over 32%. MSTW down 32%. MST down over 43%. MS2 is leading the pack at only down 22%. And MSTY down about 30%, has fallen over twice what MSTR has. So I'd say MSTY is kind of middle of the pack here. Now we turn to the most important, total return. MSTY has a clear advantage in this metric because it's been around a lot longer than its competing ETFs. Over the life of the fund, MSTY is up over 236%. If we ratchet that down some to 6 months, things even out a lot more. But this doesn't look good for some of these funds. MST is down over 36%, MSTW is down over 19%, and MS2 is down almost 9%. MSTY is up over 19%, and IMST is up over 15%. Now let's look at the comparison from when I made my initial purchase. Everything is down as expected since MSTR is down almost 15%. IMST down about 12%, MSTW down 19%, MST down almost 34%, MS2 down 17%, and MSTY down about 15%. So in comparison to the other funds, it's doing pretty well. It also compares favorably with the distribution amount. So overall, I'm going to give my MSTY Checkup a clean bill of health. Even though things have been negative, compared to the competition, it's nothing serious. MSTY has held its own. And hopefully, if MSTR continues to recover, so will MSTY. Here's a quick look at my upcoming distributions. Just NIVI and KOI for the next couple of weeks. So let me know in the comments, are you still investing in MSTY? Or have you moved money into MSTR investments from other fund families? If you found this video informative or entertaining, please hit the like button and subscribe for future videos. And remember, none of this is financial, legal, or tax advice. I'm just inviting you along my journey. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. Good luck hunting those infinite dividends. Take care.